Good morning, everyone. And yes, I am at a dog kennel. I am down on the farm at my mother-in-law's house, and she has 8 dogs. 8. So they will stop barking in a moment. Believe it or not, you wouldn't know that 8 dogs live here unless they get riled up. So just give them a moment and they will stop. Good morning, I'm Leisha Leslie, your executive chart analyst here at Option Pit, one of the 4 traders. And I thought we could go back to talking about looking at a chart and deciding to trade the stock or not trade the stock. And I'm going to show you how to use a trend line so that you will have a tool that will tell you, is this a stock I want to enter? Is this a stock I want to go long? Is this a stock I want to go short? So welcome back. Thank you for joining me. Oh my goodness. So when you pull up a stock chart, you know, there are stocks flying around, especially, yes, we have 4 cats too. Yeah, there's 4 cats. There's 4 cats. There used to be a bull and a baby bull in the back until it got too big. And we have cows and lots of hay and all that. Anyway, especially nowadays, there are lots of social media places that we learn about new stocks that are going crazy. X, stock twits, lots of things are out there to bring your attention, you know, to those crazy meme stocks or whatever's trending. We see it immediately now, right? And it may be stock, and even for me, lots of times it's a stock that I've never even heard of. And you pull up the chart, you want to be able to say, oh, this stock looks like it has further to go higher. This stock looks like it could go in the tank. This stock isn't really going anywhere, right? You want to be able to pull up a chart and like immediately see something. Are you able to do that now? I'm going to show you a very simple tool on how to be able to break down a chart very quickly, very easily, and make some sense out of it. It's trend lines. I'm going to talk about what a trend line is. I'm going to teach you how to draw a trend line. I will give you the guidelines on how to use the trend lines trend lines properly. And we can talk about how to trade from it profitably. Now, I know a lot of you probably are like, yeah, I know what a trend line is. It's super easy. Yes, it is. It's super easy. But it's always nice to have a refresher. Maybe we have some peeps that don't really use them. They're so simple to learn and use that if you're not using them, you're missing out on this easy tool. So by the end of it, by 10:30, you will be able to pull up a chart and immediately draw a trend line. Oh my goodness. So here is a stock chart, just plain candles, red and green, up and down. Would you, pulling up this chart out of nowhere, would you buy or sell this stock? Any ideas? Right? Any opinions? No one has an opinion? Scavenger would buy it. Oh my goodness. Scavenger would buy it. Do we have any sellers? Do we have any people? Hang on a second. Okay, we had a visitor unexpected from the county. The dogs are calm now. I apologize. Okay. Kind of confusing, right? We don't really have any guidance on what to do with this stock when we don't, it's just a bunch of candles up and down. We add a few trend lines to the same exact stock. Now you kind of have a little visual of, wow, this stock has consolidated for a while, meaning it hasn't moved out of a certain range. This little newest, more recent, it's been in an uptrend, meaning it's been trading higher. We have these several days in a row where the stock could not trade beyond 230.78. Once you see that, that's a great opportunity to add a trend line. So now that you've seen the stock with the trend lines, would you still be a buyer or would you rather sell this stock? Fred says sell. Shane, a member of mine, look for confirmation. Very good advice. We always like to look for advice. W. Williams is still a buyer. And we have more sells. I agree, Jerry, it is hitting resistance. The stock is hitting resistance. It cannot get the oomph, the momentum, the buyers to get it to leap over that resistance level. That's one bearish signal. This is very fresh and new, right? It's only from the beginning of August, so it's 21 days in. But it is an uptrend that has been tested several times. The stock has begun to fail that. We have a nice bearish candle. All these factors, the simple little trend line will tell you, don't buy this stock yet. It may not be screaming sell yet, but do not buy this stock yet. Wait for it to break through that resistance line. So let's dig in, and by the end of today, you will be able to draw trend lines. You can pull up any stock you've never seen before. In fact, I recommend going in and practicing with some stock charts and draw some trend lines. So what exactly is a trend line? The trend line on the chart becomes a level, a price level, where the stock repeatedly reverses every time it hits that level. Every time it hits that level, the stock will either bounce on the downside or sell off on the upside. And you can see it happen several times. Repeatedly, that's a price level where the buyers or sellers, they reverse and the other one takes over. So the trend line, drawing this in, shows us where the support and resistance lie on the chart. And that is where the stock reverses the support and resistance levels. That's why you want to know where they are, because that's where the opportunity lies. You see the stock, oh, okay, it's been up here several times. This could reverse again. After it's been at this level 4 times now, let's see if it does it again. Oh, here we go. I'm hopping in. This is the trading opportunity. This is why you want to learn and use trend lines. So what exactly is support? Support is a price level on a stock that may stop it from going down. Now I say may because as in trading, nothing is 100%, right? It may return to that level and stop going down. As you can see here, the support in XLY is 210.01. And we know that because it has visited this level 1, 2, 3, 4 times. It held that level. Once you see that happen, 2, 3 times, it's pretty safe to feel like, oh, this stock is going to bounce from here. It's going to hold this level, the support level. I can make a trade from here. And if you were in this trade, you had several times you could make $8. The resistance is up at 218. So the support level, the 210.01, is where the buyers come in. They're all sitting there. They're waiting for that stock to trade at that level. Everybody's watching the same movie, right? Well, smart ones are. The smart ones see this as a support level and they're buyers there. The stock has proven itself to bounce from there before, rally from there before. Those buyers step in. The people that sold it up here, they cover their shorts. They know this is a support level. They've made their money. They exit. So buyers come in, sellers cover. That creates that support level. Resistance is the same idea, only on the upside. On the upside, the stock cannot break through that price level. And XLY, in this case, it's at 218.10. Now, this is a month and a half. This is mid-May to July. There were several opportunities here to buy at 210, sell at 218. Pretty confidently. After you see it happen several times, you see the stock approaching that level again. You get a bearishness as it approaches the resistance, a bullish signal as it approaches support. You've seen it happen before. You have the confidence to go in and make this trade. So with the resistance, the buyers sell there. They take their money off the table. They know resistance is up here. It's happened before. They'll take their money off the table. They'll sell. And short sellers will come in to try and make some money because last time it was up here, it sold off. I'm going to sell it at 218. I'm going to watch it come back to that support at 210. Very simple, powerful, money-making opportunities. Support and resistance. Okay, the most important rule for support and resistance. Once the stock flips over or surpasses that price level, that old resistance now becomes new support. And as in this case, this was resistance 4 times until it wasn't. And now, after the stock breaks through that price level, it is now new support. So remember this, write it down. Old resistance is new support. And that makes sense. Everyone has been watching this level since way back here in mid-May. So they all know that now 218 is no longer resistance, it is support. Same thing on the reverse side. Old support is now new resistance, right? This is crude oil. It was support for going back for several months. Suddenly, and look how violently it breaks through, comes back, and now it's going to be a level, a price level everyone's going to be watching that's been watching from back here. This may not break through here. Soon as it does, though, there's your opportunity. This thing's going to go higher. It finally broke through that resistance. There's an opportunity to trade it back up to that price level. And then once again, comes back down, it's support again. It's a very key level, and this is probably 8 months here, very key level in crude oil. That is a price level where the buyers and sellers reverse and the stock will reverse or hold. The stock will hold is what I mean. The stock will hold until it doesn't. Okay, let's walk through it again real quick. The pivot points are the levels or prices where the stock reverses, providing trading opportunities. Well, yes, exactly. When it holds, it is reversing, right? It comes down and holds, it will reverse. Holds at the resistance, it will reverse. These are the places where we have an opportunity to buy or sell. Buy at the support, it's going to bounce. Sell at the resistance, it should sell off. Also, once the stock has honored that, your other price trend line, price level, could become your price target, right? Especially in a scenario like this. It's done it so many times. Your other support or resistance level is your price target. And you need a price target because when you enter options, when you're buying options, you need to know your risk reward. And your risk reward is going to be, I'm betting on this stock going up from here. How much can I pay for this option? How much will this option be when it hits my price target up here? Is it worth it? Is that option going to move enough for me to make money on it? So having a price target helps you determine when you're buying or selling options if the risk reward is there. That's why you need a price target. Your trend lines will help you where to enter, where to exit. That's why you need to know that. Also, once you are in your trade, we all need to use a stop loss. Where will I bail because I was wrong? Where will I take my loss? That's your stop loss. You can use your trend line. Use, a few pennies, 10 cents, 20 cents, depending on the size of the stock. It begins to violate or no longer honor that level. That's where your stop loss is. You bail and you look for a new trade. Now remember when you are, which we will get to when we draw it. So pivot points, trend lines, support resistance, show you buying and selling opportunities, show you price targets where your stock may be going to help you evaluate your risk reward, and provide a stop loss. All your trading plan right there based on the trend lines. Super easy, great strategy, and many people use it. If you're not, you're missing out on a super powerful, easy tool. Let's draw a trend line. Super easy. Go back to the left hand. Start at the right side of your chart, the most recent, and go back to the left through history. You find a line or draw a line that shows where the highs and lows are matching up. Sometimes you'll use the real body, which is the colored part of the candle, the difference between the close and open. Sometimes it'll be the upper and lower shadows, or what people call the wicks. The further in time that your line goes, and the more times the stock has honored that line, the more powerful is your trend line. So let's look at, I pulled up this stock. This is actually a pretty interesting stock. Now, just looking at the stock, right away you can see, grab your horizontal line. Right away you can see this as a base, right? You can see the stock honored this level all for months down here. Nice support level. On the upside, we see the very highs. Twice it was stopped out up here. This time didn't quite make it up there. Also, I see these highs match pretty well. Here and here. There are lows here. So this is zoomed out, right? If you're looking for a longer term trade, you can zoom out and say, yeah, I'm buying down here and I want to ride it back to the next, or the very all-time high. You are trading more recent or shorter time options, expiration options. You can come in closer and see that this is a support level and this is a trading range here. Same, this support level goes here. Here, you can adjust it a little, it's right around that area. You can see that 1764. You see this right now sitting at a resistance, old resistance, now new support. Hey, I'm putting this stock on my watch list. It's sitting at this support. Where's it going to go from here? It may pop. It may honor this level once again and go higher. I have an opportunity to trade to these next levels, these previous highs, 2405 to 3050. But you do want to give yourself a little leeway. You want to see the bullishness happen. You don't want to do it immediately. Let the price reveal itself that this is going to bounce, hop in, take your 50 cents, take your dollar, take your 50% profit, your 30% profit, wherever you're comfortable. But you can see how this provides opportunity. Now, if this fails this level and you begin to see it really kind of fall apart, you can write it to the downside. And you can get pretty particular about your levels. Is it going to maybe pause there? Or is it going to trade all the way back down here, which is a little more powerful than that? Opportunity, buy it or sell it, or buy puts or buy calls. And so simple, so simple. The more times the stock honors that level, the more powerful is your trend line. I recommend you start using them today. So very, very few guidelines. You're drawing the trend lines to show yourself the price level where support and resistance is sitting. These trend lines can be drawn on any stock chart, commodities, cryptos, futures, anything that has a chart, any time frame. You can use 5 minute, 10 minute, hour, month, weekly. The longer the stock honors that trend line, the more powerful it becomes. If it's been back to this level in history and then revisited, it's a powerful, very good trend line. You don't want to, when it trades away from it, you may not want to delete it. You may want to keep it because it can come back. It can come back and become a viable price level once again. Also, when you are watching your stock, intraday, I use daily because for option trading, I like to use my daily for looking for trade setups. When you're looking for whether the stock is honoring that level, the close is more powerful intraday. And as we've all seen, you can, not honor a level intraday, but then manage to close within that support or resistance level. So the close is always more powerful than the intraday. The opportunities are found when the stock revisits that trend line. You have proof that it stopped there before and reversed. Is it going to happen again? And this is where you can enter and provide your trade opportunities. Again, once it hits that level, though, you want to have the stock price reveal itself, show you that bullish or bearishness before hopping in. You don't want to hop in immediately after it crosses. So just to sum it all up, the trend line, drawing a trend line, shows you where the support and resistance are. Why do we want to know that? That is where the stock may reverse. And when it honors that level, it's going to reverse. This gives us the opportunity to make a trade, to buy it or sell it. And And once we are in that trade, another level, higher or lower, is going to become your price target. Where you think the stock is going helps you evaluate your risk reward. Entering an option, the more the trend line is validated, or the more times it's been honored, gives you confidence in your trade. Again, can be used at any time frame on any stock, commodity, and very simple to use. So let me show you how I have every night for Small Account Challenge, I send out a watch list. These are my stocks I'm looking at. Maybe we have some trade ideas developing. And I show at least 3 stocks. And a lot of times I use the trend lines. Yesterday I wrote about telephone. 3 times the stock twice the stock could not break out. 2 all-time highs. I don't know about all time. 2 previous highs, most recent highs. Suddenly, yesterday, the day before, it's breaking out over that resistance. Let's see what it's doing today. Just out of curiosity, market's lower, but. Oh, it's honoring, and look, it is higher. Last night I wrote, telephone's going to possibly trade higher. Wait for it to clear the median line, and sure enough, phone is up 20 cents today. But hey, it's up on a down day. I think we're still down. So build a watch list. This, in the morning, you'll have ideas. What are the first stocks I should look at? Well, phone's a good one. Now, phone has an opportunity to trade to the top of the channel, like we talked about in pitchforks. And I said, telephone broke out above its new highs. It broke out above that resistance and looks primed to trade to the top of the channel at 30.40. Last night it closed 29.28. Also, the options are very inexpensive. $1 move, and telephone is, you can buy 45, 50 cent options, and they'll go to $1. The risk reward is there. So that panned out. Here was one from my watch list on July 31st. I wrote that Citigroup looked like it's ready to fail this old resistance, now new support. All those little lows. It's very recent, but it counts as support. And suddenly the stock is failing it. Big red candle. After being stopped out at the top of the pitchfork, another bearish sign, right? Resistance up there, traded right to the top of the pitchfork. Citi looks ready to sell down to 91.27, possibly 89.5. So I send this to my members after the close on the 31st, and this is what Citigroup did. Traded down to 88 and change. Philip Morris, this is one that got away from us. We talked about it in ticker highlight that one day, but we went with a different stock. I think we went with Hood that day. I told my members, it's not Philip Morris, Altria, is looking bullish after clearing the pitchfork resistance and the most recent highs. Recent high, didn't quite make it there. Several times the stock has tried to bust out above that 60.92 level. Finally does it. Nice bullish greenness there. That was on July 31st. Here is where Philip Morris is today. This is where it began to break out, and just really powerful, super powerful rally. The consumer staples are getting the buying right now. And sure enough, it showed up in Philip Morris. So just to recap, trend lines, we need them, use them, pull up a chart, draw in the trend lines. It will show you where the support and resistance lie, which is where the opportunity lies, because that's where a stock may reverse. It's done it in the past. It may do it again. This is where you find your place to buy and sell. your place to enter, and your place to exit. Gives you your price target. Once I'm in, where am I going? Well, you should know your price target before you enter your trade. Always have a trade plan. Know that before you enter. Is your risk reward there on that option you're buying or selling? The validation that the stock has done this several times before gives you that confidence in your trade. And again, super simple, can be used on any stock chart, any time frame. Oh, thank you, WA. That's very sweet. Philip, or I keep wanting to say, it used to be Philip Morris. Yes, it is smoking hot. All right, I haven't looked at chat at all. It doesn't look like you're saying too much here. Any questions? Oh, Cat for confirmation checks her favorite algo. That's cool. Morgan recognizes a doji. Turn those machines back on. Is a straight trend line more important than a moving average? That's a good question, WA. I bet every stock's different, right? I would recommend looking at the history. I do keep I keep the 2150 and 200-day moving averages on my charts, on my dailies. I do look at those levels. Has it honored that level before, or has it just, kind of ignored it and blown through it? I don't know if one's more powerful than the other, but I think the trend line is probably more powerful. 200 days probably pretty powerful though. Don't forget to use pitchforks. That's right, WA. The combination of the two is amazing, because when a pitchfork support resistance level lines up with the trend line, you have double confidence, double reasons to make the trade. Kat, I can assist you in that, Kat. This is being recorded. You can always get the recordings over here. State of the market replays. Everything we do at Option Pit is live, is recorded. Hey, Chip. Okay. All righty. Yeah, the lines can get crazy, but once they don't become valid anymore, you can remove them. Oh, good, Kelly. Thank you so much. Of course, Kat. Just ping me. We can talk real quick. Thanks, guys. Thank you so much. Have a wonderful day and make lots of money out there. Be sure to check out Small Account Challenge. Have a wonderful